Today, I want to talk about a topic that comes up often in the sale of a farm or ranch: seller financing, or as some call it, carrying a contract. If you're considering selling your property, you may have heard buyers ask, would the seller be open to carrying a contract? It's a common question, but for many property owners, the immediate answer is no. Why? Well, most of us think of carrying a contract in terms of a traditional mortgage like the ones offered by banks. Low down payments, small monthly payments spread out for 30 years, and the risk of the buyer defaulting and then having to go through the process of repossessing the property. That idea alone is enough to make anyone say, no, thank you. But here's the thing: seller financing doesn't have to be risky or a long term burden. When structured correctly, it can be a powerful tool for selling your property, providing financial benefits for you while still protecting your interests. Let's break it down. What does seller financing typically look like? When I talk with sellers about carrying a contract, I explain that it's not like a traditional bank mortgage. Most seller finance deals involve terms that are much shorter and safer for the seller. Here's a typical structure. Buyers usually put down a minimum of 30%. That's a significant upfront investment, often much larger than what a bank requires. Payments are calculated over 10 to 15 years, but there's usually a payoff in 3 to 7 years. This means the buyer will refinance or pay off the balance in a shorter time frame. The interest rate is often more favorable for the buyer than what they get from a private lender or bank, but it's also higher than what a seller would earn from other investments like savings accounts or bonds. This setup ensures that the seller gets regular payments, a competitive return on their investment, and the property paid off in a reasonable time frame. Why would a buyer choose seller financing? Buyers may look for seller financing for several reasons. Flexibility. It's often easier and faster than going through a bank. Credit issues. Some buyers may not meet traditional loan requirements, even if they're financially stable. Creative deals. Seller financing can sometimes help a buyer afford a property they might not otherwise qualify for with a bank loan. But here's the key: when a buyer has skin in the game with a large down payment, they're typically highly motivated to follow through on their obligations. What's in it for you, the seller? Let's look at this from your perspective. Why would you, as a property owner, consider carrying a contract? Financial return. The interest payments you can earn significantly increase the total amount you receive for your property. Think of it as an investment that provides steady income over a set period. Attracting buyers. Often, seller financing can make your property stand out in the market and attract serious buyers. Security in the deal. If the buyer doesn't meet their obligations and the contract is properly structured, you retain the property and keep the down payment. So how do you protect yourself? Now, I understand the concerns that come with carrying a contract, especially when it comes to risk. But the good news is there are steps you can take to protect yourself. Ensure a clear title. Before entering into any agreement, verify that the property is free of liens. A thorough title search by a reputable title company is essential. Work with professionals. Don't go it alone. In addition to a title company, consult with an attorney who specializes in real estate contracts to ensure the terms are clear and protect your interests. Evaluate the buyer. Just as banks assess borrowers, you can too. Request final information to ensure the buyer has the resources to honor the agreement. Common misconceptions about seller financing. Let's address a couple of myths. Myth number one: if the buyer defaults, I'll be stuck with a problem property. The reality is, with the right terms and a strong down payment, this rarely happens. And if it does, the large down payment you receive often offsets the inconvenience. Myth number two: I'll lose control over the process. The reality: you can set the terms that make you comfortable, including timelines, interest rates, and penalties for late payment. When does seller financing make sense? Seller financing isn't the right fit for everyone or every property. It often works best when you own the property outright, you're open to generating income over a few years instead of receiving the entire sale price up front, you're willing to work with professionals to structure a solid agreement. If you're unsure whether seller financing is a good option for your situation, I'm here to walk you through it. My job is to help you understand all the options and make an informed decision that aligns with your goals. Selling a farm or ranch or rural property can be complex, but it doesn't have to be overwhelming. Offering seller financing might be the key to selling your property quickly while maximizing your financial return. If you have questions or want to explore whether carrying a contract could work for your property, let's have a conversation. With the right plan, selling your property can be a smooth and profitable experience. Thanks for taking the time to watch. I'm here to help you navigate the sale of your rural property, no matter what your needs are. And remember, it's all part of making sure you feel informed, confident, and supported every step of the way.